Let's talk about a credit spread. Now we've already seen examples of a short credit spread here in the previous slides, but here I take you through the strike selection, the whole mechanics of how we enter a trade and how we exit it, and what do we actually look for before we put the trade on. A credit spread is actually selling an option and then buying an option in the same we do it same expiration right now because otherwise it's called a calendar trade. If you trade two different strikes or even similar strikes in a diagonal is different strikes in different expirations. A calendar trade is different expiration cycles basically. So here at credit spread we collect a net premium because we're selling options. We collect money from the buyer who is buying the options, the credit spread from us. And it's a defined risk strategy because we know the exact amount of money we will make and we know the exact amount of expected loss in the trade that we have. There are a lot of undifferent strategies that we as well, and we will be making courses on that later. The idea here was to get people started on a beginner level course, which is defined risk, meaning people don't want to lose too much money. If you do, then you are demotivated and you don't want to do this again. And therefore, start small and trade small. Yes, keep trading, learn the mechanics here, and then move on to the undefined strategies. Now, undefined strategies like strangles, it's one of my favorites. In high volatility, we sell both sides. We collect money on both sides. So there's no harm in that. You just need to know when you're selling options and the probability of making money is on your side 70% of the time, meaning you are likely to make money 70 to 75 to 80% of the time. And I'll show you this in on the platform as well. Why do I say over 80% of the time we are likely to make money? Because we have probability on our side. We're selling these out of the money options to buyers who only have a 30%, 20% chance of winning this way by buying these let's move on to this platform. First go to how to trade these credit spreads in the futures options market. So we follow three simple rules, and here they are. Number one, we enter the trade when volatility is high and we sell into the strength of the market. We are not direction agnostic. We don't care, to be honest. We sell the hell out of these things when there is an opportunity. Number two, our methodology is to go out in time, approximately between 30 and 60 days. And duration gives us less volatility in the overall returns of the portfolio, meaning the daily moves that you will see, the P&L moves that you'll see in your account, when you have duration on your side, it'll be less. So you will sleep better. And you collect more money when you have more. The market has to beat you. You don't have to beat the market. The market has to beat you here. Number three, we then select our strikes based on deltas, and we start at 17. 17 is my go-to number. I start at 17 when I'm selling. My short strike is around 16, 17, 18 deltas. I don't go 20. I don't go 21. I don't go anywhere beyond 20. It's less than 20 on both sides to start with. 17 deltas is my sweet spot. And it gives us approximately over 80% chance of winning. And I'll show you that on the platform in a minute. Okay, I'm back here again. ES Futures. Let's take a look. /EJ/ES. Why is it not coming up? There it is. E-mini S&P 500 Index Futures December contract. That's the one that we want. So here's how we put trade on. We don't go 30 days. We look for now I'm looking for actual trades. That's trade specs here. This is how we will trade. Through the alert system, I will set that up. I create courses. I put them on the website. You learn the strategies, and then we trade together. I have an alert system going, and I will send you the alerts, and you can copy and paste my alerts. But the goal is to make sure that you learn it as well. You don't just copy and paste. You don't just follow my trades blindly. You should be learning this yourself. You should be thinking about where to put the next trade on, where to put the next strike on, which expiration cycle and whatnot. But to get to that level, I will help you get to that level. Anyway, 58 days to expiration. This is what, if I have taken this trade right now, although 58 days is slightly too long for me, meaning it is 10 days too long for me. So I would have liked this at 48, 50, but 58 is fine for demo purposes right now. Now here's another thing. The setup I have here, I have open interest and I have volume. Now volume is the daily trade. Like what are people trading today? This is today's number. And open interest is what have people got? Uh, what are they holding? This is a running total of all the contracts basically. And I will do a video on how these numbers change and what are they actually. Yeah, but for now, 17 deltas is my sweet spot. So here it is. 4100, I'll select this one. Two same 70 deltas, I'll select the lower one. And in ES we go $20 wide. So we sell a vertical here, and we go our long side is $20 wide. So 4080. Okay. So what am I doing? I'm collecting 225. Now for demo purposes, I am going to change this number to 250, meaning, well, we normally target 300. Remember when I showed the slide? We were collecting $3. So ideally, we would to collect 3. But if that is not available, then we live with whatever we get. Anyway, next we analyze the trade. These are the steps I'm showing to you. And this is exactly what I do. I follow the exact same procedure every single time I put a trade on. So here, look at this. Okay, so this is what the Analyze tab looks like. The first thing I do is I select the -10 +10 thing. Puts my cursor on where the strike is, or where the underlying is. Okay. Now here, the shaded part is the expected move region, meaning from here, from where it is right now, it is expected to move up to this point, up to the shaded part, and it is expected to move down up to the shaded part, based on the volatility. So I've seen that. Now I see this middle line here, 0 numbered. The top and the bottom are if the underlying moves +10 and moves -10. But these are static numbers. I don't really care about those, so I don't look at them. I look at this middle line. And one more thing I do is I go and break even, and I select the actual expiration date, which is 12/16. Now here's the number I'll care about, 83.85. That's the one I want. We want anything above 82, 83% here, this one. We want something 83, 84, 85, 86, 87% on our side. Meaning this is what this is showing is we have an 83% chance of being in the money. When expiration happens, we have an 83% chance of being in the money, the underlying staying out of the money, and we are making money. That's when I say we are P&L positive. So what this is saying is there's an 83.85% of chance that the underlying stays within this point and this point here on the left and the right. And that's what we want. We want the underlying to stay within those markers. Well, we actually want the underlying to stay with anywhere from here. If it goes up, it's perfect because we are long here. On the bottom side, on the downside, we do not want this underlying to go beyond our break even, right? Now, if it does, we have risk management tools, meaning we convert this into an iron condor. An iron condor meaning we sell the other side of it, so we reduce some risk there. But I will show you that when we get there. This is how we set up the trade. 84% of the time, this thing has to come on our side. That's what this is saying. When you collect $3 on ES, now look at the ticket now. You are collecting 150. You see this buying power effect? The further you go out in time, the lower buying power it is for you. It's even lower than 350. So, time means your buying power is lower, and you collect more money. It's 150. This is the trade setup. Once the trade is set up, we let it go. We sit on it. We wait. It's a waiting game. We collect data on it, right? Now this data is saying negative. This is wrong. It should be positive, but because the markets are closed, these numbers are off. So this is how we set it up.